Good morning, everyone. Thank you for joining the webinar today. It's bang on 11, so maybe we kick things off. Today, I'm going to tell you a bit more about the Value Earth Fund. My name is Declan McLenaghan. I'm the portfolio manager for the fund. I've been with microequities for 9 years and investing in international markets for most of that time. And it's now been 7 months since the launch of the Value Earth Fund. So we wanted to take some time to provide an update and a bit of a refresher on what we do and how we do it. And I'll be happy to take some questions at the end, but please type those in the chat as we go, and I'll do my best to get to all of them at the end of the presentation. So just flick over the disclaimer. So what is ESG? If we start at the beginning. ESG refers to environmental, social, and governance. And we believe that integrating these factors into our investment process can help us manage risk and also help us to identify promising investment opportunities. And so here we've listed some salient examples of each factor that we look at in our investments. So, for example, issues we might consider under environmental would be things like pollution and land impact. Under social, we look at things like human rights record and employee health and safety. And under governance, we look at board and executive structures, board composition, and financial transparency. And all of these are equally important in the investment process. And so what is the Value Earth Fund? It's a small and micro-cap focused fund. We're looking for profitable, growing businesses, and all investee companies must meet our minimum threshold on ESG criteria. Our policy is to seek companies that are ideally doing good, which we define as contributing positively to the United Nations Sustainable Development Goals. And at a minimum, our investee companies should do no harm. And that's defined in our responsible investment policy. And we can touch on that a bit later. But we think that this combination of focusing on both business and ESG risk will enable us to deliver strong investment outcomes and also manage risk while aligning us with our clients' objectives. So then, portfolio construction. We're investing in developed markets, primarily North America, the UK, and continental Europe, as well as Australia and New Zealand. We're looking for profitable businesses with solid growth runways, ideally with little to no net debt and competent management teams. And we have to be able to purchase these at attractive valuations, and all investee companies must meet our minimum ESG criteria. And so, consistent with our value investing philosophy, we keep a keen eye on the risk return in the portfolio, and the largest holdings will be those that we deem to have the best risk return profile. And as value investors, we view risk as the risk of permanent capital impairment, not just adverse short-term price movements. And then in terms of the specific parameters, we can have up to 45% of the net assets of the fund invested in companies with market caps over $1 billion or equivalent at the time of purchase. And we can have a maximum of 20% invested in companies headquartered in Australia. Microequities has always avoided investing in mining, REITs, and biotechs, and those policies apply to the Value Earth Fund as well. So the fund is long only, there are no short positions, and we don't use leverage or derivatives. The currency is also unhedged, so it's a plain vanilla structure, just cash and equities. Our view is that many investors are underallocated to global equities, and currency is part of that. And since we don't have a view on the direction of currencies one way or another, we don't want to pay extra to hedge that out. So we've complemented our value investing philosophy by looking at risk and opportunity through an ESG lens. So in addition to all of the normal risk factors that we look at, like the balance sheet, the competitive environment, customer concentration, and so on, we're also looking at ESG factors. Our exclusions are defined in our responsible investment policy, but a few key and fairly obvious examples include zero tolerance for the production of alcohol, zero tolerance for exploration, mining, or production of fossil fuels, and zero tolerance for human rights breaches. So for social factors, that could be something like whether the company has a human rights policy or a track record of social participation, which could include charitable donations, for example. And then on governance, we like to see women with some representation on the board, an independent chairperson, and ideally at least a third or more of the board being independent. And then finally, as part of our commitment to making a tangible contribution, 5% of the management fees paid to microequities are donated to the Foundation for National Parks and Wildlife and used to plant trees in fire-affected areas. And so far, in the 7 months since launch, we've helped plant 74 trees in Australia, helping to preserve our wildlife and wilderness. And so how are we integrating ESG into the investment process? We take a 4-stage approach. So we start by using exclusions and negative screening. So companies involved in certain industries, such as tobacco, gambling, and mining, are all eliminated immediately. We then use our internal framework and sometimes third-party data to identify ESG risks. So one example of this might be a grocery retailer selling alcohol or tobacco, and that may not be apparent by simply looking at numbers on a screen. We also closely review social and governance factors at this stage, so the composition and independence of the board. And then when necessary, we can also engage with the company or board on ESG-related issues. And finally, should a company cease to meet our criteria, we'll divest our holdings. So let's have a look at the kind of companies that we're investing in. Our first example is Spirax Group, which is headquartered in the UK. Spirax sells and maintains steam systems, which are used for things like heating, cooking, drying, and cleaning. And they also provide electrical process heating and pump systems. The company has a market cap of around 5.8 billion British pounds and a very strong record of growing sales and earnings over time. So in terms of doing no harm, the company has reduced their greenhouse gas emissions and their staff injury rates over time. Their governance processes and board composition are very good, so positive on at least the minimum. But in terms of doing good, Spirax's products improve the efficiency of steam use, and steam can be a less energy-intensive option for certain industrial processes. The company is also developing Target Zero, a system for replacing fuel-fired steam with zero-emission technology. And our next example is NPK International, a US-headquartered business with a market cap of around $560 million US. And they sell and rent recyclable matting systems to customers, including utilities, renewable energy companies, construction companies, and customers in the oil and gas industry. So these mats that MPK produces can be used in place of wooden mats, which are often only used for a single job site. And they also create significant risk of cross-site contamination. MPK has done an admirable job of growing sales and earnings over time, And in the last 3 years, they've grown revenue by 59% and their earnings by 307%. So very positive on the fundamentals as well. In terms of doing good, in terms of doing no harm, MPK is working to reduce their own greenhouse gas emissions and energy consumption and their injury rates, which is important for an industrial business. And pleasingly, executive remuneration is also partly tied to the company's ESG goals. Now, in terms of doing good, NPK's mats use recycled materials and are themselves recyclable. And they also help to displace wooden mats, which have much shorter useful lives and increase the risk of cross-site contamination. And then here we just have a brief case study on a company that we were invested in. This company is Volue, a software business headquartered in Norway. So Volue sells to the energy, power grid, and infrastructure markets, and they have customers in over 40 countries. Their products help to optimize the production, trading, and distribution of energy, and they also help allow grid owners to design, maintain, and monitor their grids. So Volue was intended to be a key pillar of the portfolio at launch, weighted at around 6.5%. And a week after the fund launched in July, fortunately after we'd reached most of our intended weighting, the company received a takeover offer from private equity at a 51% premium to the last traded price. And at the time of our purchase, Volue had a market cap of 4.2 billion Norwegian kroners, or around 380 million USD. So it was a little bittersweet. We expected to be long-term shareholders. And while the fund is still early in its life, we think that provides some validation of the fund strategy in terms of looking for profitable, growing, and undervalued businesses that are also seeking to make a positive contribution to the world. Now here we have the numbers up to January. So we've delivered performance of 13.8% after fees since inception, or 24.8% annualized, which is ahead of our annual target return of 10%. And if you're interested, all of the fund updates are available on the website, so you can flick through those. And then we also have the sector breakdown and country breakup. So all in developed economies, and the market cap breakdown predominantly in small and micro cap companies. And we're still holding a little more cash than we'd like, but we've been gradually deploying that into new ideas, and we're always looking for more. And then in terms of the key features of the fund, unit pricing takes place monthly on the first day of the month. And we're long-term investors, so we do ask our investors to be long-term as well. So the recommended investment term is 5 years or more, sorry. There's no lockups, but we do have early exit fees. We are benchmarked to the MSCI World Small Cap Index with fees at 20% of outperformance, and we do have to recoup any underperformance before fees can be charged. Our management fees are 1.8% ex-GST, and the minimum investment is $100,000. So that's all of the slides. If there are any questions, please feel free to put those in the chat. I'll just give everyone a second to put those in, and I'll answer any and all questions. Adam, I can see you've raised your hand. Will the recording of this meeting be available to registered participants? Um, I'm not sure at this point. There will be a recording. I can see you've also commented that the chat's disabled. I can see your questions, so I'm not sure if you have anything else. Adam, in terms of a copy of the slides, maybe let me get back to you on that. I think there will be a copy, or we have a copy internally. Whether we'll distribute those, I'm not sure yet. Um, Terry Blake, I can see you've asked a question about crossover in holdings between this fund and the other funds. There is some crossover. So, of the 29 companies currently in the fund, there are seven holdings in common, representing about 20% of the assets of the Value Earth Fund. Daniel, yes, there are application forms online, but otherwise, please feel free to reach out to one of our relationship managers who'll be able to help you with that. Any other questions? It doesn't look like there are any other questions at this time. I guess with that, we'll wrap it up. If you do have any questions or any follow-ups or you'd like some more information, please feel free to reach out to us, have a chat to one of our relationship managers. Um, More than happy to have a chat and answer any questions you might have. With that, thank you very much for your time, everyone, this morning, and have a great day.